Hey there, my YouTube friends. Look, I want to share this article with you guys as fast as possible because I got a video clip that I want to put in this video as well. And this article is based off of a recent story on 60 Minutes about how our politicians can take advantage of things like inside trading on the stock market to obtain wealth. And as you may or may not know, they also can take advantage of other inside information and quid pro quo deals, etc., that could make them a lot of money. Long story short, we have politicians that make on average a couple $100,000 a year who are amassing unbelievable wealth while they're in office. Some of these people net worth are millions of dollars, multimillionaires, $35 million and more, for example. So I wanted to make sure you were aware of the story on 60 Minutes, had a chance to see it, and I also want to cover a little bit of this article in the San Francisco Chronicle entitled Pelosi Aide Calls 60 Minutes Report a Smear. According to the article, House Minority Leader Nancy Pelosi's office accused the news program 60 Minutes of omitting key information from its report Sunday on how members of Congress use privileged information to profit from stock trades. Pelosi spokesman Drew Hamill also called the report a right-wing smear based on a new book by conservative author Peter Schweizer of the Hoover Institution, a think tank based at Stanford University. The book is titled Throw Them All Out: How Politicians and Their Friends Get Rich Off Insider Stock Tips, Land Deals, and Cronyism that would send the rest of us to jail. Notice the title is Throw Them All Out. It didn't say throw all the Democrats out, or it didn't say throw all the Republicans out. It said throw them all out. And if you see the 60-minute report, you will see that it is covering both Democrats and Republicans. So it's not a right-wing smear job. Pelosi, a San Francisco Democrat, was highlighted in the report along with House Speaker John Boehner. There you go. Republican Ohio and House Financial Service Committee Chairman Spencer Backus, Republican Alabama, among others. In an interview Monday, Schweizer said the most egregious allegations of insider trading concern Backus. At the height of the 2008 financial panic, Backus participated in private briefings by Federal Reserve Chairman Ben Bernanke and then Henry Paulson, warning that the financial system was about to collapse. The next day, 60 Minutes reported Sunday, Backus bought a stock fund designed to rise in value when the markets sank. Studies led by Georgia State University professor Alan Ziobrowski found that stock portfolios of senators beat the market by 12% annually, while those of House members by about 6%, returns he called abnormal. Okay, you just heard, and you will see more when you watch the 60-minute video, how during a time when many of us were losing our 401k and other stock investments in the stock market, which affected the housing prices and jobs, some of our lawmakers and the overseers of our country were taking advantage of the situation and getting rich. All I want to say is they don't really care about us. By the way, this was being done legally. Watch the video and let me know your thoughts.
Most former congressmen and senators manage to leave Washington, if they ever leave Washington, with more money in their pockets than they had when they arrived. And as you are about to see, financial disclosure records. The results became a jumping-off point for our own story, and we have independently verified the material we've used. Schweizer says he wanted to know why some congressmen and senators managed to accumulate significant wealth beyond their salaries and proved particularly adept at buying and selling stocks.
There are all sorts of forms of honest grafts that congressmen engage in that allow them to become very, very wealthy. So it's not illegal, but I think it's highly unethical. I think it's highly offensive and wrong.
What do you mean honest graft?
For example, insider trading on the stock market. If you are a member of Congress, those laws are deemed not to apply.
So congressmen get a pass on insider trading?
They do. The fact is, if you sit on a healthcare committee and you know that Medicare for example, is considering not reimbursing for a certain drug, that's market-moving information. And if you can trade stock off of that information and do so legally, that's a great profit-making opportunity, and that sort of behavior goes on.
Why does Congress get a pass on this?
It's really the way the rules have been defined, and the people who make the rules are the political class in Washington, and they've conveniently written them in such a way that they don't apply to themselves.
The buying and selling of stock by corporate insiders who have access to non-public information that could affect the stock price can be a criminal offense. Just ask hedge fund manager Roger Ratnam, who recently got 11 years in prison for doing it. But congressional lawmakers have no corporate responsibilities and have long been considered exempt from insider trading laws, even though they have daily access to non-public information and plenty of opportunities to trade on it.
We know that during the healthcare debate, people were trading healthcare stocks. We know that during the financial crisis of 2008, they were getting out of the market before the rest of America really knew what was going on.
In mid-September 2008, with the Dow Jones Industrial Average still above 10,000, Treasury Secretary Hank Paulson and Federal Reserve Chairman Ben Bernanke were holding closed-door briefings with congressional leaders and privately warning them that a global financial meltdown could occur within a few days. One of those attending was Alabama Representative Spencer Backus, then the ranking Republican member on the House Financial Services Committee, and now its chairman.
These meetings were so sensitive that they would actually confiscate cell phones and BlackBerries going into those meetings. What we know is that those meetings were held one day, and literally the next day, Congressman Backus would engage in buying stock options based on apocalyptic briefings that he had had the day before from the Fed chairman and the Treasury Secretary. I mean, talk about a stock tip.
While Congressman Backus was publicly trying to keep the economy from cratering, he was privately betting that it would, buying option funds that would go up in value if the market went down.